Good morning, everybody, and this is your S&P 500 day trade setups for today. And yeah, what can we say about yesterday? I was looking for rejections everywhere for quite some time, and nothing was respected. So there is still a downtrend. It's just getting really messy. We keep coming up to try and break through the 155, and then we consolidate, and then we reject it. So at the moment, oscillator's not offering us anything. Price action giving us a big inside bar here, another inside bar here. Um, yeah, so that could be a double bottom. And I'm just going to put the neckline there. It could be very much double bottom there. I'd like to see that retested. Look to the left. Look at all these tails around here. So that is a fairly decent zone where you would expect price to come back into the structure to retest that break. If you look at the 3 hour, you'll see we now have a crossover of the moving averages. We are above the 155, and look where the 155 EMA sits. That's in that zone. So a retest of this is very much on the cards. We have a pin bar at the moment with the oscillators grouped to the upside, but no real structure to the left to talk of that pin bar is rejecting. So I'll take it with a pinch of salt. What I am looking for though is a retest of something. So I don't really have a trend line to play. Well, I suppose I do. It's going to be from there to there, or even there. But I think that's the trend line you want to play with. And then what I do have is this weekly high here from last week. And remember what I said, we start getting above this high, that is going to start triggering a little bit more buying pressure. So for the moment, been a messy week, big down, big up, confusion, and then what's looking like a bit of exhaustion. But important to note that we do have a crossover of the moving averages. What we want to see now is we want to see that holding. And if it starts to hold, then we are looking for opportunities to buy. So at the moment, if we get down to the hour, remember we do have non-farm payrolls coming out today. First thing to notice is look at the oscillators. They have separated quite aggressively. And remember what I say, when they separate aggressively like that and they cross over when they are far apart and you are above the moving averages like this, expect another quick, violent move in the direction you're traveling, and that is up. So this is still a very decent target, 39.50. This area here is what I would expect to be tested. And you can see yesterday we didn't really, pretty much confused. And then all of a sudden got this exhaustion bar up and nothing indicating that you could actually look for a trade there. So this is what I'm paying attention to. If price can hold 38.75 or alternatively 38.52, that is your opportunity to buy into this. We just dropped down to the 15 minutes, which is what you're going to look at for your trades. You can see lots of confusion. The only thing that's in your favor for the bulls was that the trends, the moving averages were up. So there's a pin bar and an engulfing bar and an inside bar, and another engulfing bar. So hindsight being a perfect science, probably should have been looking for a break of, let's just put this level in. Should have been looking at a break of that. That was at the market open, at the European market open, and you can see break and then a retest of that. There it is there before this exhaustion bar. So hindsight being a perfect science, there definitely was an opportunity there, but bank that knowledge for the next trade. We did form a bit of a wedge here going into close, and looks like we have broken the wedge, but nothing earth-shattering. To be quite honest, it's basically formed a bit of a channel. Okay, so let's just look at the structure for today. We either pulling back down here, that is what I would prefer, 38.75, retest that, and then if you're looking on the 50 minute, I've got another level here, but I think I'm just going to do that. Look at that structure that was formed. So either another retest here, which is the 155 EMA as well. So that's kind of the area I'd be paying attention to. That's 38.66 and 38.75. If price can get back down there and we start forming positive bullish price action, there's a good opportunity for a continuation to the upside. Non-farm payroll, so I would expect it to go sideways. So either keep drifting in the channel till it gets into this area today, or alternatively just break the channel and go sideways until the data comes out. Non-farm payrolls is definitely going to impact this price action one way or another. The other way to look at this is sort of getting above this area here. That's 3,900. Get above 3,900 and hold. Then we're looking at 3,950. Ultimately, for me, if you look at the weekly, let's just get rid of the noise. If you look at the weekly, and I do that, I suppose I could actually just put it a little bit higher. There is my weekly structure to the upside. That's 39.53. And look what's been happening the last couple of weeks. Series of higher lows. Potential double bottom here. Oscillators grouped nicely. Diversions on the oscillators at the moment. So could be a flat bottom triangle forming on the weekly. And if I drop down to the 8 hour, you'll see what I'm talking about. There's the bottom trend line. There's the top there. So start getting above 39.53. That starts triggering bigger moves to the upside. So anyway, that's kind of my view today. Wait for the pullback on the lower time frames. Bear in mind you're still in a downtrend, so don't jump in and expect it to continue. Get in, get out. Have a clear target of what you're taking, whether it's 100 points or 50 points or whatever it is. Just get in on the structure, take the trade. Once your profit target is realized, get out of it, move on with life, come back next week. Okay. Anyway, that's kind of my view today. Hope it helps and could be exciting next week. And I'll catch up with you next week. Cheers for now.